China's economy just went from bad to worse. It was bad because unemployment is high and their housing market has been crashing. And now it just got worse because Donald Trump has promised high tariffs on China once he enters the White House. Let me show you what those tariffs would mean for China, assuming that they get approved. Let's assume I'm Nike. I'm in the business of manufacturing these shoes, and if I produce these shoes in China, which is what I'm doing, I can produce a pair of shoes for $25, then I'll ship these shoes to the United States and then sell it to you for $100. If these Chinese tariffs are imposed, let's assume that now this cost of me, Nike, producing the shoes goes up to $40 because now I, Nike, have to pay this tariff. Well, if I have a higher cost to produce this pair of shoes, I'm gonna have to charge you more money, which means I might now have to charge you $160 for the pair of shoes in order to maintain my profitability by now producing these shoes in China. That means now I have two options. Option number one is I can try to eat up this cost or raise your prices, that way I can keep manufacturing my shoes in China. Or option number two is I no longer manufacture these shoes in China, that way I can avoid paying these tariffs. Now just for this moment, let's ignore the impact of tariffs on the United States and focus in on China. You have to imagine that some companies will move some manufacturing out of China because of this, because they don't want to pay these higher tariffs, and it might be profitable to do this manufacturing in another country, or it might be more profitable to move this manufacturing back to the United States. But what does that mean for China? That means that some companies may be now incentivized to move their businesses out of China. And remember, the Chinese economy is already struggling. Their unemployment is already high. They're already facing these struggles. And now if businesses move their operations out, they move their jobs out, that wouldn't be good for the Chinese economy. But instead of me just talking in theory, let's get a little bit more granular. Manufacturing is the backbone of the Chinese economy, and in 2023, manufacturing made up more than 26% of China's GDP. The number one largest thing that China manufactures are goods for China, but the number two largest thing that China manufactures are goods and products for the United States. So if this circle represents China's economy, China's GDP, more than a quarter of China's GDP is made up of manufacturing, we know that China is the world's manufacturer. The number one products that they produce are for China, but the number two largest products that are produced in China are for the United States, which means a big chunk of this part of China's economy is the United States. And now at the time of me recording this video, we're seeing two things happen simultaneously. Number one, the Chinese economy is already hurting. And number two, Trump has promised to impose tariffs on China once he enters the White House, which could be another blow to the Chinese economy. Now, I know many of you are investors who are watching this video, and you might be investing in the United States economy, maybe Chinese investments, and I want to give you this disclaimer. Number one, I am just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And number two, I want you to be a long-term investor, which is you're investing for the long term, not for election cycles. That being said, we know that the person that is in charge of the White House can direct different sort of government spending, which can impact certain industries, certain sectors, certain companies, and certain stocks differently. And for those of you that want to understand now how Trump's policies can create some unique investment opportunities, for you, I'm hosting a live workshop on November 19th at 10:30 a.m. Eastern Standard Time, where I'm going to be going over some of the Trump policies, which he's already talked about, which could impact different industries, different sectors, different companies, different stocks, and how these can create unique investment opportunities. So if you'd like to join me, if you're already an investor and you want to be a more sophisticated investor and understand where these opportunities are, it is a free workshop. It's a live workshop. I would love for you to join. All you have to do is click the link down in the description below to register. Now, if we go back to China, back in September of 2024, we saw China unleash a big stimulus plan to get the economy moving again, but it wasn't enough. Just days after Trump was elected president, China then unleashed a brand new $1.4 trillion stimulus plan just a few months after the previous stimulus plan to get their economy moving, maybe to proactively protect themselves against these potential tariffs. And then they went on to say that you can expect even more Chinese stimulus coming in 2025. Now, of course, we don't know for sure if the Chinese stimulus is a direct response to the Trump presidency or if it's just a correlation, but there's another part of the world that's also getting worried about these tariffs outside of China. Want to guess who? Europe. Read this headline. Europe faces a full-blown recession under the Trump tariffs. A major Dutch bank is warning. Now again, everything that I'm talking about in this video is based off of what Trump has talked about. None of this has been approved yet, but he's talked about imposing tariffs not just on China, but on many other countries, including European countries. Trump has vowed to impose a 60% tariff on goods imported from China and a 10% blanket tariff on all other goods entering the United States. Now I know I might sound like a broken record, but let me show you why this matters for Europe. Number one, the United States is the largest export partner for Europe, and number two, for the 1-2 punch, the European Union has not been doing very good economically. Now I know there's a lot of countries in Europe, but I'm going to talk about it as a collective because what we've been seeing happen as a collective is the economy in Europe has generally not done as well as the United States. There's been a lot of contraction in the economies over there, and at the same time they make a lot of money in Europe by selling their stuff in the United States. And so if these tariffs are imposed, that could also again hurt the economies even more in Europe. Let me show you what ING had to say, the major Dutch financial institution. The already struggling German economy, which heavily relies on trade with the US, will be particularly hit hard by tariffs on European automotive. That means Europe's worst economic nightmare comes true. So now we've talked about China, we've talked about Europe, but what does this all have to do with the United States? Now there's two ways to look at this. There's the economic perspective, and then there's your personal investment perspective. Because yes, these tariffs, if they are imposed, can create unique investment opportunities because we know that certain industries, certain companies, certain countries may benefit more than others. But then we have the economic side, which is a little bit easier to understand, so let's start with that. On the economic side, the goal that Trump has talked about with these tariffs is, number one, to bring jobs back to the United States. Because if we're manufacturing in these other countries, that means that we in the United States, these companies in the United States are employing Chinese employees. They're employing other employees in other parts of the world, which are not jobs in the United States. Now, of course, there's a reason why companies have exported their jobs over there. It's because the labor might be cheaper, or certain laws might be more favorable, or certain manufacturing might be easier. But this is where Trump says he wants to bring these jobs back to the United States. And the way that he wants to do that is by essentially fining you if you do your manufacturing somewhere else. And the second part to this is if we bring the jobs back, it's to then grow the economy. Now, every critic of the tariffs has said that the problem with this is it is going to raise the prices of goods in the United States. And you're 100% right. If your cost of producing a product goes up by 10%, 20%, 60%, or 200%, you as a business have to maintain your profit margin somehow. Either you're going to raise your prices, or you're going to eat that cost. But if you eat that cost, you might not be in business that much longer depending on what your business margins are. Or number three, you're going to find a new solution. And so we don't know exactly what businesses are going to do. Some businesses might not move out because of the difficulty of moving out. Other businesses might move their manufacturing. Other businesses might raise their prices. Other businesses might try to eat up the cost. We don't know exactly what's going to happen until it happens, but the goal with this is to bring the jobs back into the United States, to bring some of these manufacturing jobs back in the United States. That way when you go and buy stuff from Walmart, that you don't buy as much made in China stuff, you buy more made in the United States stuff. What will actually happen? Well, we don't actually know yet. This is where we don't know what types of tariffs will be passed. We don't know where the tariffs will be imposed on. And then we don't know the real extent to who's going to be forced to pay those tariffs. Are there going to be exceptions or not? This is where you start to have a whole bunch of very intense political discussions of people saying how this is going to work or not work. The people that are saying this is going to work are saying, well, if we impose these tariffs and then we cut taxes and we can lower energy costs, all the costs will offset versus everybody else. They say, no, this is going to raise the prices. This is going to make inflation worse. How are people going to be able to afford this? What I want you to understand now is not how you get emotionally riled up, but rather understand how these things create investment opportunities. And that's where I want you to think. How can you find investment opportunities? Because if these tariffs go through, well, then this can impact the economies in other countries. And if the economies in other countries get hit, that could benefit certain companies and certain industries in different countries. And this is where I'm not going to do a whole analysis in this video. Again, I'm going to be going over this all in my workshop on November 19th at 10:30 a.m. Eastern Standard Time. I have the link for you down in the description. But if your goal now is to be a financially savvy investor, that means you cut through the emotion, because everybody loves to argue about how much they love or hate tariffs. I want you to understand, how can these create unique investment opportunities? because the stock market gives you the opportunity to invest in companies overseas. It gives you the opportunity to invest in companies here, and it gives you the opportunity to build wealth if you understand how shifts are happening in the economy. Now again, you don't have to get that granular and invest in these shifts. I think for the average person, one of the best things that you can do is just invest in the American economy. For example, if you invest in the S&P 500, you're investing in a piece of the 500 largest companies in the United States that are publicly traded. And now it doesn't matter what's going on. You just keep investing in the S&P 500 no matter what, because we have seen historically over the last century that under a Republican president, the stock market goes up. Under a Democrat president, the stock market goes up. We've also seen the stock market fall under Republican presidents. We've also seen the stock market fall under Democrat presidents. So in general, the stock market goes up. But we've seen it go down under Republicans and Democrats. We've seen market crashes happen. We've seen recessions happen. We've seen boom periods in the economy. We've seen bad periods in the economy. That's a fact, and it's going to continue happening in the future. For some reason, people like to live in this fairy tale la-la world where they think that the markets will either only go up or they're only going to go down, but that's not the case. The financially savvy make money whether markets are going up or down, and that's what I want from you. Because if you want to be able to actually build wealth, you have to be able to cut through the noise. Because most people are just arguing on emotion while everybody else is getting rich. And now you got to decide. Which side do you want to be on? The side that's just constantly crying, complaining, and arguing, or the side that's actually building wealth? And if you want to be on the side that's building wealth, then you have to be investing in your financial education and look for the opportunities and then actually invest your money based off of a strategy that actually works for you. So that's my rant for today. And with that, I'll see you on YouTube tomorrow. The IRS just released their new tax brackets for 2025, which is why in this video, I want to go over what these new tax rates look like so you know what to expect. And then I want to go over how you could potentially pay less money in taxes legally. This is what the tax rates look like. These are the numbers if you're filing as a single person. These are the numbers if you're filing married and jointly.